Well, welcome back, everyone. After a long market weekend, I'm glad to be back here with you as promised and give you a view of what we did in markets today and where things are as of right now in after hours. Now, for those of you watching thank you for taking the time, and I hope you had a wonderful, long extended market weekend. Happy Canada Day, happy Independence Day to folks on the Canadian and U.S. sides respectively, and to anyone else that's celebrating out there listening in over that long weekend. Now, for today, July the 5th, you've got a very scrunched up chart on screen right now where you can see the SPY. It's on a daily chart. It's above the center of the weekly pivot range. It's above a couple of major retracement levels and lines. And it's near the top of this upward sloping channel. Now I'm going to zoom in on this for you. And really what the order at hand is at this moment was today's action in terms of the pullback that happened pre-market, a little bit of pullback during the day, and then a rise back up. Did it refuel the tanks? Are we ready to go for another round up? Now, my answer to that question is I think that we have another slight dip to go before we can actually push up again. I am looking for a higher high this week versus last week in markets overall. And technically, that's already happened, well, actually very close to happening on the Monday light trade. However, the actual high from last Friday, was $444.30, and the high point so far was made on light trade on Monday, $444 and about 8 pennies. So not quite yet above that high, but I am expecting a higher high. But it may be preceded by a pullback into the center of these weekly pivot lines, where you can see the range effectively drawn out here for you. Very top, 452, very bottom, 426. Center of range is the mattress. Coming back down to test it is what I'm looking for as a likelier outcome, and it comes in a couple of different ways and rationale for why. I'm going to show you some powerful tools that can support that insight specifically, but before I show you that, I'm going to show you what it looks like with the Qs. So the Qs did make a higher high versus last Friday, June the 30th. They did so on light Monday trade. They did so earlier today. And they actually closed at a higher point versus last week's close. So that's positive. But remember, the Qs did not make a higher high versus the mid-June highs like the SPY did. Okay, so the SPY did make a slightly higher high. The Qs did not. So this is not something that I want to fully lean on just as of yet. I'd rather discount some of that, especially seeing that the Qs relative to the entire globe's worth of equities is really stretched, kind of like it was when things started to top out in November of 2021. So I want to be careful with that. The Russell also, as a canary in a coal mine type indicator, obviously gave us a negative day and ended up closing in support of the center of its weekly pivot range, but not in a positive state, in a swing high state. And all of this is compounded by, of course, we saw a rise in volatility today. Nothing epic, but enough to get your spidey senses up at a bare minimum to go, okay, something may be afoot. That comes with data being released tomorrow morning, excuse me, from the U.S. market. Private payrolls for the ADP company is going to be reported tomorrow at 8:15 Eastern, and that comes as the day today saw the dollar rise. So why is this important? Not a great set of prints into the close on the indices you just saw, a rise in volatility as you already saw, and the dollar is on the other side of that, on the other side of equities, meaning when it goes up, the equity market tends to go down, kind of like you saw a red close today and the dollar in a green close. Now, what does that bottom line out to? That bottom line out to the dollar having some risk to keep rising, likely going to get caught in this hornet's nest of resistance, but that rise triggered by perhaps a beat on the payrolls, the private payrolls tomorrow. I'm expecting not a significant beat on the Friday data, which is the official data, but we could see a fairly significant beat tomorrow. And we beat in the last 6 months on the Bureau of Labor and Statistics data, which would make it more likely that dollar rises, and that could cause some issues for the equity market overall. Now, if I want to simplify all of this and utilize powerful tools that can help me with trading decisions, as they've helped me with trading decisions on what I'll show you right now, on a swing trade I did on oil from last week, where I was able to take on a swing and gross a 4-digit gain, take the trade on in front of members, and then close it in front of members in the active trader room today, with the reason of, hey, we've come up to top of the range. And the signaling that I had was positive, which I can show you in just a moment. But this trade was done live. I'm not going to guarantee that results like this can happen all the time, but it was a 4-digit gain on an oil swing trade with the same powerful indicators that I'm going to show you right now that are helping me with that market call on the SPY or on the ES. We're going to do it through the lens of the SPY. Here's your weekly chart. It's still very bullish, but a pullback to the fast speed line or 439 bucks and change would not be off base if we are not continuing to see higher highs pressing on. The daily chart is in a spot where you can see a negative divergence in terms of highs over here, highs on some of the marketplace indicators like Rob's Life's Work, his ITP toolkit. These are the triggers for them. And we made a high on the triggers, and we made a lower high on the fast trigger in today's, and so far over these 3 candles from last week, like Monday, and today's market. Now, we are still in a bullish state. There's not too much of a question about it from my perspective, but a little cooling off may be at hand first. And we saw a bit of that in pre-market today, and a little bit more during market day as well. The 4-hour chart, which looks at 3 to 5 days typically, has a negative divergence. That's one of the Wealth Chart member exclusive tools. That's an exceptional tool that says, hey, there's a problem with the SPY at around 444 bucks and 30 pennies, roughly the highs that were made last week. And we have not been able to surmount them. And we can see more of an exhibition of that negative divergence with a confirmed locked-in line here on that 4-hour time frame. We can also see some of the things in some of those Wealth Chart member exclusive indications like the Spike 2.0 tool. You know that you've got marketplace indicators on this chart as well, like the Triple S, like the TRP that I taught you a lot about last week, which I'm going to refer to in a moment. But here's your Spike 2.0 tool. Okay, we've got the fast spike coming down and the slow spike still above the top of the channel. This does imply that we're running a little light on that very high octane bullish fuel, and we could have to pull back to refuel. And if you look at the point of where we can pull back to on each time frame, fast speed line, first support on the weekly, okay? That's around 439 bucks. The support structure of most significance on the daily is between the slow speed line and the top of the champion cross buy zone, another Wealth Chart member exclusive indication. And that's around 439 bucks and call it 60 pennies. And then you go and look at the 4-hour chart and you take a look at, where we are right now and where the next major area of support is if we break below 441 and about 90 pennies, which was roughly the low of the session today. Well, that would take us down in towards this territory of around 439. Now, we would still be coming into a buy zone that has been expanding on the 4-hour, daily, and weekly charts, and still have lots of positive energy. You can see the throttling from Rob's marketplace ITP indication right there. You can see the Triple S, that's my indicator, in a bullish state in the uppermost quadrant. So I'm not worried about the dip being rebought. It's whether the dip is imminent and whether or not that dip can be bounced right off of 439, or does it have to be deeper? From my current vantage point, it would be 439, 440 as the likely area that we can come down to and then bounce back up off of, more likely than not. Now, I'm not going to tell you that I know that will happen. And with respect to that oil swing trade that I told you about a moment ago, where I was able to gross a 4-digit gain from last week entries and exits on the entire position today. Well, I want to give you a view of what these same tools would show you for oil. Now, I'm going to do it through the lens of USO, not CL specifically, so you can kind of get a view of what the technical indications have to say overall for oil. I'm going to flip the screen right now where I've given you my view on the SPY. I think it's a dip and bounce, and I think that the oil move overall is not one that is, you look at it on the surface and you go, is this really ready to go? It's been in a range, and effectively it bounced off the bottom of a range. So when you take a look at the daily chart, you see a lot of red on the screen, a lot of blue candles as well. But it's been in a range. It did get a positive divergence. And when you take a look at the weekly chart, you can see so far, for the week so far, meaning like trade on Monday and today's move, we've got a couple of buy signals on the candle so far. Now, the week is obviously not closed. The subchart indications would tell me that this is still a high-risk trade. The daily chart would tell me that when we got entry signals last week, okay, where we got Triple S signals, we got a positive momentum shift, we had a positive divergence to lean on, well, this was still a higher risk trade. The reason I took on this trade is because of the regularity of signals on a 4-hour time frame with this range that we've been in. So we've effectively been seeing things like come down towards the bottom of the range, get initial buy signals like the TRP buy signal that fired off on the 28th at 9:30 a.m. Eastern Time on USO. And it has a target 1 that's still open, midline target, and a target 2. Now, I've taken the position off the table while I've let members know that I largely intend on getting back into something like this. And again, I cannot tell you that results like these will happen all the time. Past performance is not indicative of future results, but it was a nice little tidy 4-digit gain. And I'm looking for more, but I want to see it really break out above the top of the range. You know, we've seen it come into buy zones and last for 3-4 days and then pull back. It's been in that buy zone for a day now. So I can't say that it's used up all of its energy. It is on a bounce that is in a buy signal state on the 4-hour time frame. It is working off of a TRP buy and ITP and triple S buys and wealth signal like champion cross buy zone. When I take the time frame down to an hourly chart, you can see that that bullish upward move is still intact, and it throttled. Lost a little bit of momentum into the end of the day. Lost a little bit of energy here on the Spike 2.0 tool, but overall still pointed up. So I'm looking for, like the market, a small dip and then a bounce back up to make it to target 1 or higher on that hourly chart and or, of course, the 4-hour chart. And I'm excited about sharing these insights with you on live trades and deconstructing them and teaching you the tactics and strategies that I use across a variety of asset classes during the Wealth 365 Summit that is coming up in less than 5 days. And I am very much looking forward to seeing you there. Simply go to joinziad.com and get your seat, get registered up, and I'll kind of deconstruct some of my recent trades and or trades during the summit that I take and show you the technical tools, the strategies, the power of the tools, power of the strategies, and of course, sprinkle some common sense over there to help with how those decisions were made, win, lose, or draw. And of course, I'm also interested in giving you my outlooks on the market as we move through the summer. And there's going to be some exceptional speakers at this summit. Rob is working like crazy to make this summit the best one yet. I was just on the phone with him. He does say hi to everyone, hoping to see you on videos like these from him as well in the near future. But the man is working hard to create more and more value for everyone listening into videos like these, wealth charters, BBT members, and more and more. So join us at joinziad.com. Get your seat. Looking forward to seeing you at the summit. I'm speaking on Monday, and so is Rob. So we're looking forward to that on July the 10th with you as well. And we're going to have multiple touch points during the session. Have a wonderful rest of your day, and I hope that the second half of the year has been a great one for you so far. Bye for now.